Welcome to Digital Asset News, or Dan for short. My name is Rob, and today we got to go over a couple of issues that I think is going to come down the pipe as far as regulation. And we're going to talk about what that means, how fast it's actually coming, and we're going to hear from somebody who has their head in the game, Senator Ted Cruz, as he talks about the things that are coming down as far as regulation and what to watch out for. Also, we'll take a look at the break-even point for Bitcoin mining. Also, we're going to talk about who is DCG. Digital Currency Group. And then lastly, we're going to do a follow-up to the ITRUST question, which is what happens if ITRUST Capital and Coinbase become insolvent? At the very end, we're going to do the Shield Folio or the Stone Book giveaway. So we'll do at the very end also a Q&A. So the first things first, the giveaway, of course, will be at the very end. This is the beautiful Shield Folio or Stone Book where you can write all your mnemonic phrases in. Wish I would have had this a couple years ago, or actually 4 years ago, when I wrote down my mnemonic phrase for my Daedalus wallet, lost it, and now 20,000 Cardano will never, ever be into anybody else's pocket because it's stuck forever. So again, we will check that out. Also, if you don't win, which chances are you probably won't, but if you don't, 50% off starting on Thursday, continuing on Friday for anybody who wants a Stone Book or a Shield Folio to do all that great stuff. Okay, so speaking of which, why is there a big giveaway for Shield Folio? Well, it's because Thanksgiving's coming up and they're having a big Black Friday sale, actually Black Friday and I guess Gray Thursday, I don't know. And some things that have come about as you go through to Thanksgiving dinner. Now, of course, not everybody's from America. Here in America, we celebrate Thanksgiving. And of course, maybe expats across the way. And of course, you're going to see a lot of your family members and they're going to make fun of you. Let's just be honest, because you told your family members a little bit too much. You were too ambitious about the prospects of crypto perhaps last year. So you're going to see this and it's okay. I know it's going to be tough. So you got two options. Of course, when this happens and people are ragging on you for recommending crypto and of course talking about crypto and Bitcoin and things like that, you can just, say one of two things. One, you can say, shut your lip and just pass me the stuffing. Or you can start to talk about some other things. And just if you're going to go down that conversation, just remind people. And this is a good reminder for me too, not just our family, but just how much cycles come into play. This is from Alistair Milne. I think I said his name right. And he makes a good point. He goes, everything happens again and again and again. It's all cycles. In 2015, everything and everyone is a scam. Of course, I don't know if you remember this, but Ethereum, all the Bitcoin maxis would say that the only reason that Ethereum was around was because it was a scam. And it was only to take money away from your Bitcoin. Everyone is lying and about to go bust. I think is actually true right now, especially with Genesis and whoever knows what other companies may be imploding. Bitcoin is going to zero. I've heard that many times. There's an eternal bear market, a super cycle bear market, which we talked about now because, we are in a different cycle. Now we're not in an endless quantitative easing or money supply. We only pump because of a scam, FTX. Regulators will destroy the industry, which we're going to talk about today. Just remind them, if you're going to talk about this, go, look, maybe I was a little bit ambitious last year, but everything is in a cycle. I've learned that now. And I think things will improve as time goes on, just like in the dot-com era. And we saw a lot of businesses go by the wayside, but Amazon and Google came out of that and everything works out pretty well. Also, remind them that, I'm here for the long haul. I think crypto is going to do pretty well. I think it's a game changer. Even Senator Ted Cruz talks about it. And just like we've seen in the different cycles of 4 years, it's the same thing repeating itself. 2012, we had a halving. Then came an all-time high in 2013, dip reset. Same thing happened 2016 and 17. Same thing just happened 2020, 21. And we're going to have a halving coming up in March 2024, which isn't that far away. And then sometimes, well, actually, so far, it's always happened. We've seen an all-time high after that. So just remind them that, yeah, it's a bummer right now. It's a pain, but I think there's better days on the horizon. Okay, so that takes care of that little piece of sage advice. Let's talk about regulation. So on this channel, I've talked about regulation. I really just want clarity. What's a security? What's a commodity? What's a currency? That's the big thing. I'm not asking for much. Unfortunately, because of FTX, just like Milne talked about, because of that scam or that Ponzi, it's not a scam. We call everything a scam. It's a Ponzi. Maybe it's not. Don't sue me. if you have the money to sue me. I don't know, FTX. But here we start. So it begins. 3 U.S. senators urge Fidelity Investments to end Bitcoin exposure on retirement plans. So if you don't know, Fidelity is going to roll out Bitcoin investments opportunities for their clients. That's just you, me, Joe Schmo, and everybody else. And Fidelity, if you don't remember, they've got, I want to say 3.2 trillion assets under management. So it's a pretty big squeeze to go through that. But unfortunately, Senators Durbin, Smith, and good old Elizabeth Warren wrote a letter to Fidelity Investments saying, do not do this because of what happened to FTX. Now, this is one of the things you have to understand. FTX is not Bitcoin. Bitcoin is not FTX. Obviously, I think most of us know this, but it is shocking to me just how little senators on both sides of the aisle don't understand exactly what it is. It's not that we collapsed. It was because FTX collapsed because it was essentially running a Ponzi. So this is understood by the few, not the many. And you're going to see it right here from Senator Ted Cruz from the great state of Texas, where I'm from. And he's going to just lay it out like, this is what's going to happen. Here's the problem. And here's where I see things moving forward. So just take a listen. This is about a 2-minute clip or so. And I got to tell you, if you're going to follow anybody, now you may not like Senator Ted Cruz's stance on certain things, but on crypto, I think he's spot on. So let's just take a listen to the interview quickly.
Happened with FTX, on the face of it, it appears to be serious fraudulent conduct. And there's going to be investigations, there's going to be countless lawsuits. And if there was criminal conduct, anyone who committed criminal offenses can and should be prosecuted.
I got to tell you, just listening to that, I just thought to myself, maybe I was a little bit too hasty in my assumption of what is happening here with these 3 senators, with Durbin, Smith, and Warren, because they're saying, and of course, this is a little bit biased over here on Benzinga. Maybe what they're saying is, I'll give them the benefit of the doubt. I'll give them the benefit of the doubt. Tell me where I'm wrong here. Maybe they're like, look, we don't understand exactly what happened over here. And before we go forward or we have other people exposed, we want you to put the brakes on it and then hopefully come talk to us. Maybe I think that would be the best case scenario of what's happening. Of course, everybody's laughing at me right now because they're saying, Rob, you are naive and you understand that these senators don't want any of it to go forward. But I'll give them the benefit of the doubt. Unfortunately, I think it is a problem. But I will say it is quite concerning that at least, Ted Cruz can get it pretty easily and say, look, the FTX isn't Bitcoin. Bitcoin is not FTX. So we should be able to allow people to invest into it. It has massive potential. It's a really great thing for Texas. What he's talking about there is he's talking about job creation. Senators and politicians love job creation. And boy, it is a boom over there for the different mining operations that it has done. We're going to talk about that in a second. And just, of course, job creation. And of course, what's happening with the electrical grid and doing the grid things. So I think that's, as long as like a Ted Cruz, alumnus, Hildebrand, Rep. Tom Emmerer, and there's a couple other ones that are out there that can actually speak up for us, I think we're in a good position. And another thing I will say is this. I am glad that here in the United States, so Congress, we have the Senate, and we have the House of Representatives. Democrats retained the control of the Senate. However, for the House of Representatives is favored towards the Republicans. What that means is that they can't ram bills through. Now you actually have to talk about things and let them understand and say, okay, maybe this isn't the right choice here. So I see this as potentially a good thing, but unfortunately, if if time has taught us anything, it's usually when something goes wrong and goes bad. That's when regulation comes forth, and it is the wrong because they try to really just ram it in, and it's the wrong one. That's why I was kind of pushing for regulation a while back when things weren't so crazy, and we could actually talk to these regulators without them having to deal with the emotion of their constituents coming to them and going, I lost everything in FTX. You got to stop them. You got to stop Bitcoin. That wasn't the problem. The problem was lack of education. Anyhow, let me know what you think about that. It's in the comments section. And then this was another interesting piece. Same video, actually. I linked this in the description below. This is the break-even point for Bitcoin miners. Now, this right here, this gentleman, this is Jason Less, excuse me, of Riot Blockchain. I believe he's the CEO. And he's going to tell us what the break-even point for Bitcoin mining is. And this is the thing about Bitcoin mining. I know people have told me that, Celsius wants to do this and they want to, come out of bankruptcy using this method. I'm like, I don't know if that's the right thing. So just take a listen here. This, again, it's about, only about 30, 40 seconds to talk about what Jason talks about from Riot Blockchain as far as the break-even point. Let me know if you think it's a tough industry to be into. Take a listen.
Gets there.
What is your break-even point at your facility?
For Q3, so we just realized our Q3 results, and all factors considered into our power strategy and cost of revenues, our cost per Bitcoin was approximately $8,300.
That's great.
Yeah, and then that's a testament. I really will attribute that to the power strategy and the grid balancing efforts that Riot participates in. We own large blocks of power, and we are able to sell that power back to the grid and stabilize that grid when demand is high. So that's market forces dictating the allocation of supply, not a master regulator, grid coordinator. And it's a very efficient system. And by us taking that financial risk, we both stabilize the grid and support our communities and get the financial benefit from doing that.
Yeah, so it makes sense to me. I mean, $8,300 is a pretty good price point. I think you can go pretty low. Some people were talking about $3,600, $3,900. I'm not sure where those numbers come from, but that is just one mining operation telling us that is their break-even cost. And what he talked about there as far as electricity is when the grid gets stressed not here in Texas, I'm in Puerto Rico. In Texas, they're able to shut off operations and sell back, or just not use the electricity, and they make money. So that would be in their cost basis. So when we're talking about things as far as like the Bitcoin mining operation, if you're pretty big and can do those things, I think it's obviously more favorable to you, but it just makes me nervous as far as like Bitcoin mining and the operation itself. Again, that's not my forte. Tell me where I'm wrong, Bitcoin miners. I'd love to hear from you. But there's a couple of things to talk about. First of all, there's a reason why on this show we talk about the Puell multiple every so often, and it goes back to Bitcoin miners. What this metric is, it looks at the supply side of Bitcoin's economy, miners and revenue, because Bitcoin miners, they have to sell their Bitcoin to pay the bills, keep the lights on, right? And of course, it's very simple. Period of time when the value of Bitcoins being mined and entering the ecosystem is too great or too little relative to historic norms. The Puell multiple uses the upper red band to show when the miners is super hot, or the green when it's just a little bit too below in a value situation. So again, we take a look at the Puell multiple, and we talked about this numerous times. Also, this is part of the 2025 exit strategy, or it could be earlier, it could be later, I don't know. But I'm taking a look at these and a lot of different factors, MVRVZ score, Pi cycle top, and some other ones. But you can see that once things start to reach a higher point, these Bitcoin miners, they don't have to pay so much. So, they're at, 6.59 for the Puell multiple. It's been really high in 2011, but now we're a little bit more stable down here. Anyhow, this is all you got to know. Bitcoin miners sell. When the price goes up too high, they're in profit. They're in massive profit. When it gets in this red area, maybe you should think about taking some profits. When it's down in this green area, like it's been for quite some time, maybe you could think about, I don't know, maybe picking up some Bitcoin. Is this the bottom? I don't know. Nobody knows. No one's got a crystal ball. But it's just play the average, play the probabilities, and just go from there. And also, I found it interesting about Riot Blockchain, which is this. Again, about the business. I think it's a tough business to be in. This is riotblockchain.com, their fiscal operations. They increased the 2021 total revenue by 1,000+% to 213 million, which makes sense because back then, Bitcoin price was pretty darn high and electricity costs were pretty darn low, right? They 213 million compared to 12 million in 2020. That's quite a hellacious amount of growth. However, they still reported a net loss of 7.9 million in 2021. So you go up 1,665%, but you still have a net loss as compared to a net loss of 12 million. This is for the fiscal year 2021. They were significantly impacted by non-cash stock-based compensation expenses of 68 million and the unrealized loss of 36 million on impairment of cryptocurrencies. They increased the hash rate, Bitcoin held balance, blah, blah, blah. Maybe one of the reasons why they had this little bit of a loss is they acquired Windstone in May 2021, North America's largest Bitcoin mining facility, and commenced an immediate expansion of 700 megawatts. So, I mean, that could be the thing. But I look at Bitcoin mining. That's not my forte. But I did roll down a little bit of a rabbit hole, and I was starting to think, well, how big is Riot? I took a look at explore.btc.com. We can take a look at the pool distribution, again, a little bit differently. I was just curious to see how things were because I come from the day when China was just crushing it as far as like pool distribution, but not anymore. I don't know if you guys have realized this. I mean, some of you have and some of you haven't, but Foundry USA, that's the bulk now. That's where all the Bitcoin mining is done. Foundry USA. Then you got Antpool and Binance, F2 Pool, Via Bitcoin, and some other stuff. I don't know what they are. So I was like, well, who's Foundry? Because I'm not in mining. I don't really know. You can click on here. Brings you to Foundry, their website, Foundry Digital. You scroll down a little bit, and it says right here, as a DCG company, Foundry taps unparalleled institutional expertise. Digital Currency Group, DCG. Interesting. So you click on that. Here's DCG. You know who DCG owns and is part of it as far as tentacles? Genesis and Grayscale and CoinDesk, Luna and TradeBlock. But I just found it interesting that this is their subsidiaries. Genesis, which is on the chopping block right now. They're looking for $1 billion bailout. Don't know if they're going to get it. And Grayscale, of course, we covered yesterday, where Coinbase came out and said, yes, they do have those proof of reserves. We're just not going to give you the addresses. Trust us. And of course, there's a video yesterday with me and Jerry Hall. Excellent video. Thank you, Jerry, for coming on. Just makes me a little bit, a little nervous about what's happening. So let me know what you think about that in the comments section. Interesting. And lastly, my job here is to give everybody the truth and calm some nerves and call out things when I see them. And my job, I know people say don't spread FUD. That's not my job. My job is to make sure things are accurate. So there was a question that came about because I have ITRUST capital. I use it as a Roth IRA. A lot of questions when I had Kevin Maloney, CEO, on not too long ago. And Kevin came on, also David Kemmerer from Crypto Trader, or CoinLedger, excuse me, from the tax service, which is a good, I mean, they're both great services. I love them. I like them. But the question that came up is, they said, first of all, because Kevin was talking about for custody, because remember, this is a Roth IRA, and this is the big question I had that everybody should know. Where is our crypto? Is it commingled? What happens if you guys go under? Because that's the same thing with FTX. So the thing that we talked about, of course, where the revenue generation is from. Revenue generation, of course, is from fees, right? 1%. That's what you got to pay. Yeah, but they don't do other stuff. But the other question was, what about, where's the custody? And what if you guys go under? Because that's what happened to FTX and Voyager and Celsius. Let's be honest. I was talking about them. So I put out a tweet and said, this is what's going on. There's a link. I put in also in the description from their terms and conditions. Also the FAQ also linked there. How are my crypto assets stored and secured? So how are they stored? We utilize a third-party custodian. Who are those? Fireblocks and Coinbase. The other question was, well, how do you tell, or how do you allocate that? It's like 60-40, 50-50, and the answer really is As things come in, we just move them to the ones that we deem fit and go from there. And they're both in cold storage. So it's not like it's like a precise one, but they keep them in one of the two. But the thing that question was, people were scared about Coinbase. What would happen to my IRA and assets if ITRUST Capital or the custodian, Coinbase, were to go out of business? The custodian and ITRUST Capital maintain a business continuity plan to address business wind down and account transition. When a wind down is required, clients retain ownership and control of their accounts. So again, unlike Celsius, which screwed us, you're going to be able, of course, you always retain control of your assets. With Celsius, some other players, it's like, no, those assets are ours as soon as they got over here. Kind of a jerk move, but whatever. So you retain your assets and you would be required to transfer their funds to another custodian if there was an issue. Client assets are never mixed with operating funds. I think that's pretty important, which is what, really Gary Gensler and the whole gang should have been looking out for as far as with SPF and FTX. Fun fact, the SEC was investigating FTX for months before this whole thing went down. Would have been good for them to pull the trigger, just saying. Anyhow, client assets are never mixed with operating funds and therefore are not available to satisfy the obligations of ITRUST Capital or its custodian. Meaning we can't do anything. It's yours. All you got to do is something happens to us. Our business itself, we go under. Your assets are still there. It's in the cold storage, which is Coinbase custody, different than Coinbase. You get the access to those, but you have to move them to another provider, whoever that is. Do you lend against my assets? No, they don't lend against assets. They never takes custody. Storage, digital currency are stored by the custodian using an institutional crypto wallet, cold storage, and precious metals, because you can buy gold and silver, which I did, are held at the Royal Canadian Mint physically, but they're managed via blockchain distributed ledger. Who is ITRUST Capital regulated by? ITRUST Capital is a software platform that allows clients to buy and sell crypto, precious metals, blah, blah, blah. ITRUST Capital is not an exchange, custodian, or trust company, licensed broker, dealer, or investment advisor, and they're not regulated as such. So if they go down, well, they're not regulated by anybody. However, remember, your funds aren't with ITRUST. They don't keep them in their desk drawer. They send it over to Coinbase custody or Fireblocks. The custodian is regulated as a state chartered trust company, therefore subject to regulatory oversight. The question then becomes, who watches the watchman? Who is the regulators for Coinbase? Well, if you go to coinbase.com/legal, I think I linked this in the description. If not, let me do that now. Let's see. Coinbase legal. There. Save it. They are regulated as a money transmitter by all 50 states. Money transmitter, money transmitter, money transmitter. And that's pretty much how it goes. Maybe not New York. Oh, wow, they are in New York. Money transmitter. Okay. So there's that. And then to finish this off, this is the big one. FDIC insurance. And I learned my lesson with Voyager on this one. I think we all did. FDIC, Federal Deposit Insurance Corporation, insurance applies to dollars, USD assets held by US FDIC insured banks. Remember, dollars. FDIC has nothing to do with crypto and digital assets. You cannot do anything with the FDIC as far as the requirements to back up Bitcoin or Ethereum or Tomato Coin or whatever you have. It's only for dollars. So if you hold dollars in your Roth IRA, FDIC. And it's intended to protect your money in the event of a bank failure. It does not protect your money or assets from losses relating to your investment decisions or market conditions. So FDIC insurance of USD held in client accounts is in the rollback you're considering. So if you hold dollars, for some reason, you hold dollars in your crypto Roth IRA, I mean, you can. I mean, it's not outside the realm of possibility. You will lose that if they go down. However, your crypto, which I think is what most of us have, that's Coinbase and Fireblocks, and that's where it goes through. There's no intermingling. There's nothing like that. Now, having said all that, could they be lying? Yes, because nobody's perfect, and we'll, like Sam Bankman lied right to our face. Alex Mashinski came on the show, lied right to my face. This is what they're telling me. So the thing you have to ask yourself is this. do I want to go forward with this? Is this within my risk tolerance? Do I want to do this? Well, this is what's been laid out for me. This is the information I have. And if you still say, no, I don't do it. I'm just giving you the information that I have. And I will tell you this, I am still using ITRUST. Full transparent. I've used them for 2 years. I think I have like just a little under 6,000 because I can only put 7,000 in per year. That's it. So let me know what you think about that in the comment section. If you got more questions, which I'm sure you do, I'll answer them in the Q&A. Now let's do what you're all here for. Well, for some of you, I think most of you are just here for the Dan community and the wrenches. Let's give away a shield folio, shall we? It's a good idea, Rob. Let's do that. So, shield folio. I do this blindly. I'm going to copy this. There's a great website called Twitter Picker. And I do this like every blue moon. I did this like recently. Load the tweet. And then that's it. So let's see. Winner 1. Must follow. You don't have to follow me. It's okay. Picture, description, Twitter count, tweet count. Let's just say 50. The account age, at least a month. You should be around here a month. Latest tweet within the past month, because it's November. That makes sense. And let's go. And continue. Ooh, look at all these people. 180 people. Now we will draw it and begin the drawing. Oh, look at that. That was fast. Dom at DP Clutch. Who are you, Dom? Dom, congratulations. That's a crazy picture. So Dom, I just followed you. So don't, if you're trying to scam me and you DM me with something that looks like Dom, it goes to my DMs, but the ones that are unofficial, so I don't even read those. So Dom, since I follow you, you can DM me directly. I'll get your information. I'll send you out a stone book, shield folio, and off we go. And that will conclude it for today for the news and the giveaway, all that good stuff. I will be doing more shield folio giveaways. I think they're worth it. And also, we probably should do another ledger. We probably should do another ledger giveaway. I'll do that maybe this week. Yeah, maybe this week. And that's it. So look, if you got to get out of here, get out of here. It's been 27 minutes. I've been here for a long time. I appreciate you. If you want to stick around, we'll do the little Q&A. I'll answer all your burning questions to the best of my abilities. Go from there. But if not, thanks for stopping by. I appreciate it. Now, let's get into it. The Q&A. Dirty.